Hey, today is June the 8th, 2022, and today HAR, the Houston Association of Realtors, released in the Newsweek, or the newsroom, released in the newsroom what is going on in today's market in the Houston area. So according to the Houston Association of Realtors, Houston housing shows stability in May amid churning market tides. That is the topic of today. The latest MLS release with May 2022 residential sales statistics, according to HAR, has been posted in the HAR newsroom. This is where I'm getting this information. Now it's going to be distributed in the media today, so it will be reported in newspapers and TV, radio in the next couple of days, and also on the internet. So you are hearing this first today here with Daniel Vera at My Home Destiny Group in Keller Williams. So let's go to the newsroom. Okay, the topic again is a Houston housing shows stability in May and amid churning market tides. In Houston, homes sell briskly despite skyrocketing prices going up, and rising interest rates. Interests are going up, and inventory reaches the highest level in 2022. So we have high prices, high interest rates, and we're starting to see more inventory now. In Houston, this is June 8, 2022. Home sales maintained a healthy pace in May, even as prices climbed to new record highs, and mortgage interest rates have gone upward. Individual consumers and investment companies kept up the demand. So we have people who are first-time home buyers are also competing with investors to buy these homes. Even though the high rise in prices and the interest rates going up. So these investors and homeowners are snapping up properties almost as quickly as they are listed. I call this the hungry hippo effect. Remember that game where it had the hungry hippos? You put a marble in that, as soon as it went out, you grab it real quick. That's kind of like how the market has been here, at least in the Houston area. So by the time the final closing of the month was tallied, volume of single-family homes was down slightly, just under 1% compared to last year's record pace. And thanks in part to an increase of new listings, housing inventory reached its highest level of 2022. So now we are starting to see a shift of homes coming more on the market, so there's more inventory. According to the Houston Association of Realtors, that's HAR, on May 2022, the market update, single-family home sales, they fell 0.9%. So it went down 0.9%, making the second consecutive year-over-year decline, with 9,627 units sold compared to 9,714 that were sold in May of 2021, from a year ago. So on a year-to-date basis, however, the market is running 4.4% ahead of 2021's record-setting volume. Now this is where it gets really interesting. Now, houses, okay? The $500,000 to $1 million housing segment was the hot performer of the month. So we are looking at houses that were from $500,000 to $1 million were the hot performers of the month. It wasn't the median or the average home prices. It was actually $500,000 to $1 million. And what causes that? Well, it would make sense with low interest rates. Someone can purchase a luxury home or a higher priced home and have the prices monthly payments are low. So how is that going to affect now that we have interest rates that have increased? Okay, so let's continue. Okay, so the 500,000 to 1 million housing segment was the hot performer of the month, registering a 38.3% year-over-year sales volume gain. That was followed by the luxury segment, made up of homes priced 1 million and above, which jumped 30.2%. So the 250,000 to 500,000 housing segment landed on third place with a 10.7% increase. So you got 500 to a million, gone up 38.3% year over year in sales. And then follow that up with the luxury, prices 1 million and above, that jumped up 30.2%. And then on the third, at 10.7% increase, was the homes $250,000 to $500,000 homes. And you know what we've seen last year or previous years is just the opposite. But now what we're seeing with low interest rates and higher cost, we're seeing luxury markets have gone up from the year-to-date basis. Now, the continued lack of below $250,000 housing inventory has driven consumers toward more expensive properties as well as into for-lease homes. Mortgage rates are still on the rise, with the average 30-year mortgage rate at 6.059% as of June the 7th, that's yesterday. So just a little above 6%. That is what we're seeing right now in the Houston market. The march into record territory continued in May, with buyers pushing Houston's home prices to new highs. The average price of single-family home rose 14.3% to $440,670, while the median price jumped up 16% to $351,000. The average price for a single-family home in Houston first broke the $400,000 mark in March of this year. So can you imagine 14.3% or a 6% rise of your home if you would have bought this time last year? How much that would be? You know, that's very interesting. Let me put that on a calculator. Let's just say that if you would have bought a home, or somebody would have bought a home last year, let's just use $350,000. So we get $350,000, okay, plus 16%. That's $56,000. Can you imagine $56,000 from an investment of your own home, building equity just in that year? That's not including, that's appreciation, but that's not including the debt pay down. But okay, so $56,000, so that would bring the new home value up to $406,000. Wow, that's amazing. So just think about that, and just think if it was a first-time homeowner that would buy this, and maybe they had to put down 3.5% down, right? So if they had to put 3.5% down, let's say 350,000. Okay, 350,000 times 3.5%. That's $12,250. $12,250. Divide that by 50. Oh no, let me do that again. 12,250. Divide that by 56,000. That's nearly 22% return on their investment. And that's just investing on accident. Just think if it was on purpose. Okay, so there's So what's happening is there is a low inventory of the homes around $250,000. That's what is causing the prices. You know, we have multiple offers. I'm gonna drink some water here. All right. Now the conditions appear to be calming a bit across the Houston housing market. So we are not seeing the frenetic pace of buying we did a couple of months ago, with dozens of competing offers on the new listings, noted Hard Chair Jennifer Wahab with Better Homes and Gardens Real Estate Gary Green. New listing increased 9% in May, helping boost inventory to the highest level of the year. So hopefully we can begin to see a sign of normalcy in terms of supply, demand, and pricing in the months ahead. For the second month in a row, the close to original list price ratio for single-family homes broke the 100% mark, rising 100.9%, the highest percentage over. That means that a majority of buyers paid above list price on homes on the market. The ratios first broke the 100% mark last summer as high dollar began to permeate the market. It was up 100.6% last month. So what we're seeing here is homes have been going above market, at least 0.6 to 0.9% on average. The May monthly market comparison. Between home price reaching historical highs and mortgage interest rates on the rise, the Houston real estate market eased up a bit in May as some consumers put off purchases and turned to rentals as an alternative. So we had buyers who wanted to buy, however, they didn't want to overpay for the house, so they ended up leasing a home. So the idea is to lease to save money, but is it possible that they could have just purchased a home and had an increase of $56,000 as an example of a $350,000 home that increased 16%, or pay rent, maybe let's say $2,500 a month, you know, times 2 is 5,000, right? So it adds up quickly. So anyway, so we had buyers who didn't buy, they're just waiting for the prices. So now, who knows, are we gonna have more buyers come back into the market and have more houses on inventory? Okay, so let's keep reading this here. Single-family home sales declined a fraction 0.9%. However, on a year-to-year basis, sales are 4.4% ahead of last year's record pace. So even though the house sales have gone down just a fraction, they're still higher than last year at this time. We're still selling more homes. Of all the monthly housing metrics of May, only single-family home sales and total property sales experienced decline. Active listings, the total number of available properties, jumped 14.9%, and the total dollar volume of May rose 12% to 4.9 billion dollars. Helped by a 9% increase in new listings, months of inventory reached 1.6 months of supply, the highest level since October 2021, when it was 1.7 months of supply. Housing inventory nationally stands at a 2.2 months of supply. So nationally it's 2.2. Here in the Houston area, we're at 1.6 months of supply. According to the latest report from the National Association of Realtors, that's NAR, a 6-month supply is traditionally considered a balanced market in which neither the buyer nor the seller has an advantage. Okay, so we are still in a seller's market because remember, 6 is the even point of months of supply. So we're at 1.6 months of supply, which means that if there were no more listings, just the listings that are on the market right now, and no more listings came on the market, it would take about 1.6 months to sell everything that is listed on the MLS, multiple listing service, here in Houston area. Single homes, family home update.
Alert from Norton.
Let me turn that on.
Internet security.
Okay, so single family home update. Single family home sales dipped again 0.9% in May, with 9,627 units sold across the greater Houston area compared to 9,714 a year earlier. We talked about that earlier. Strong sales among higher end homes once again pushed pricing to a historical high. The median price climbed 16%. Okay, we already talked about that. Now, let's talk about days on market. Now, that's an interesting number to know. The days on market, or the actual time it takes to sell a home, is dropped from 35 days to 29 days. That's about a week. Inventory registered a 1.6 month supply compared to 1.3 months a year earlier. That is the greatest supply of homes in 2022. That's the greatest supply, even though they're selling like 1.5 months, but that is still, it's more inventory. Okay. The current national inventory stands at 2.2 months, as reported by NAR, National Association of Realtors. Broken out by the housing segment, May sales performed as follows. Okay, now this is some interesting numbers again. So when we look at homes from $1 to just below $100,000, $99,999. Okay, the sales performed, it decreased 35.7%. There were less homes that sold for under $100,000. So what that means is, what we're looking at is it's still the same amount of homes, but they just went up to another bracket. Okay. But okay. So, but we're gonna see on this trend what is going on. We're gonna see decrease, which means they're not in that lower bracket. Home prices are going up, so it's bringing those homes to a higher bracket. Okay, so homes that were from $100,000 to just below $150,000, they also decreased by 27.6%. 27.6%. There were 27.6% less homes that were from $100,000 to just below $150,000. And then from $150,000 to $249,999,000, that also decreased from 43.3%. So if somebody was on the market looking for a home to purchase between $150,000 to $250,000, just a little under half of those homes now were not available because they went up to the next price. So that's where we see this low inventory, and where people are trying to buy homes at a certain price and they wanted to wait. What we've seen is now that same home they could have purchased had gone up to the next bracket. So now they don't, if they qualified for just $250,000, that was the max, now they don't qualify anymore. That would be, in other words, that would be about 44% of those buyers no longer qualify for those homes. right? Because they went up to another bracket. Okay, hope that makes sense. Be sure you comment on here. Let me know if this makes sense. Give me a thumbs up, hit the like, subscribe if this is something you want to see more of. You want to see more of market updates here in the Houston area. Let me know if there's other content you want to let me know that you want to see. Put it in the comments as well. Make sure you like and subscribe. This is my first video, so like a market update. So I hope you guys enjoy. Let's see what else is going on. $250,000 to just below $500,000. Those had increased 10.7%. So it increased in sales 10.7%, which means that those houses that were below 250 came up to $250,000 to $500,000. So that's where those houses went up. Okay, that's what increased the home sales on that price range. And then from $500,000 to just under $1,999,999, that increased 38.3%. Okay, because houses that were from $250,000 to $500,000, okay, homes from that price range went up to the next level of the $500,000 to just under $1 million, which made that 38.3% in sales. And then we had in the luxury 1 million and above, that increased 30.2%. Once again, you can see how every time the prices go up, it brings to another level. HAR, that's Houston Association of Realtors, also breaks out sales figures for existing single-family homes. Existing home sales totaled 7,902 in May. That was statistically unchanged from the same month last year. The average sales price jumped 14.1% to a record high $44,548, with the median sales price climbed 15.7% to $350,000 as a record high. Let me put this light on here. Let's see if that helps. Okay. And I don't know, townhomes. Let's see what's going on. Townhomes and condominiums barely held a positive territory in May. Sales volume rose a fraction of 0.4% with 832 closed sales versus 829 a year earlier. But that's our monthly update for the end of May of 2022. This is something you want to see. You're interested in the market updates in the Houston area. Let me know by liking this, subscribing, and talk to you soon. Thanks for watching.